Good morning, friends. In this video, I'm going to introduce you to the 4 categories of audit reports. And I will also discuss one of the category of the audit report, that is standard, unqualified, unmodified report. So let's begin. There are 4 categories of audit reports. The first one is standard, unqualified, unmodified report. Second is unqualified, unmodified with explanatory paragraph or modified wording. The third kind of audit report is called qualified or modified report. And the fourth is adverse or disclaimer. Out of these 4 categories, the first one, standard unqualified, unmodified report, is the clean opinion. That's the best opinion. Now let's discuss the parts of the standard unqualified audit report. The unqualified audit report has a format and it has a report title, and the second part is the audit report address. Then comes the introductory paragraph. After that comes a scope paragraph, and then the fifth one is the opinion paragraph, in which the auditor gives the opinion. Then you put the name of the CPA firm who did the audit, and then at the end you do the audit report date. Now let's dig into each part in detail. The report title. The auditing standards require that the report be titled and that the title include the word independent. Second, the audit report address. The report is usually addressed to the company, its shareholders, or the board of directors. Introductory paragraph. In the introductory paragraph, that is the first paragraph of the report, it does 3 things. First, it makes the simple statement that the CPA firm has done the audit. This is intended to distinguish the report from a compilation or a review report. So the auditor wants to explain that this is an actual audit, not the compilation or a review. The scope paragraph clarifies what is meant by an audit. The scope paragraph is a factual statement about what auditor did in the audit. So this paragraph first states that the auditor followed US generally accepted auditing standards as the criteria for the audit. For the audit of a public company, the paragraph will indicate that the auditor followed the standards of PCAOB, the Public Company Accounting Oversight Board. The scope paragraph states that the audit is designed to obtain reasonable assurance about whether the financial statements are free of material misstatement. The use of the term reasonable assurance is intended to indicate that the audit cannot be expected to completely eliminate the possibility that a material misstatement will exist in the financial statements. So this wording, reasonable assurance, is very crucial. In the scope paragraph, the auditor will also discuss about the audit evidence accumulated, and states that the auditor believes that the evidence accumulated was appropriate for the circumstances to express an opinion. He will also tell in the report that the audit was done on the test basis, means on the sampling, indicating that the sampling was used rather than the audit of every transaction and the amount on the statements. And the scope paragraph will also evaluate that the auditor has evaluated the appropriateness of those accounting principles, estimates, and the financial statement disclosures and presentations given. Now, the fifth part of the report is the opinion paragraph, in which the auditor gives his conclusion. Now, this is the most important paragraph, and this paragraph is so important that actually the whole report is called sometimes auditor opinion. Now, the opinion paragraph is stated as an opinion. If you see the wording, it starts with "in our opinion." So it tells you on the face that this is not a statement, this is not based on the absolute fact or a guarantee, it's just an opinion. So the wording is very important. The auditor is required to state an opinion about the financial statements taken as a whole, including a conclusion about whether a company followed U.S. generally accepted accounting principles or the International Financial Reporting Standards issued by the International Accounting Standards Board. Now let's talk about I'm going to skip the name of the CPA firm. This is just the address of the CPA firm who did the audit, and then the audit report date. This is very important. It's not the date when the auditor signed the report. This is the date for the report is one on which the auditor completed the auditing procedures in the field. Now, this date is important to the users because it indicates that the last day of auditor's responsibility for the review of significant events that occurred after that date of the financial statements. Now, let's talk about the conditions for the standard unqualified audit report. The first report, the best clean report. The unqualified, unmodified audit report is given in the situations when all the financial statements are included. It means the management gave all the required information that the auditor needed to complete the audit. All the financial statement means the income statement, balance sheet, statement of changes in stockholders' equity, the cash flow statement, everything was given to the auditor. Second, the 3 general standards have been followed in all respects of the engagement. What are the 3 general standards? Out of the 10 gas general standards, the first 3 are the tip. The general standards: proficiency or training, independence, and professional care. So all those 3 standards were met. Number 3, sufficient evidence has been accumulated to conclude that 3 standards of field work have been met. Now we're talking about the field standards. It means that the auditor was able to corroborate sufficient appropriate audit evidence. to do a complete audit. There were no restrictions. There were no scope restrictions. Number 4 is that the financial statements are presented in accordance with IFRS or US GAAP. It means the financial statements were done meeting the criteria of GAAP. Number 5, there are no circumstances requiring the addition of an explanatory paragraph or modification of the wording of the report. There is nothing in the company that needs the attention of the shareholders or the board of directors. It means everything is normal. There is nothing that the auditor wants to point out. So there is no need of explanatory paragraph. So these are the 5 conditions. If all those conditions are met, if all of them are met, then the auditor gives a standard unqualified audit report. This is all I want to discuss in this video, and hope to see you soon. Have a good one.